Hello, everyone. God, it's been a while since I saw you. In fact, happy holidays again. And it's still gloomy out here. It's snowing. And I'm still wearing these blue glasses, same shirt, which means that it's only a few minutes after the last uh, Facebook video. I can remember who this was. All right. Well, one of the questions that came up was, what are some of the changes in the parts? Well, in financial accounting, all right, let me tell you the changes effective first quarter of 2018. Yeah, I got to know this. All right. First of all right, I can't teach every one of these subjects, but I can tell you what the areas are. All right. They changed the definition of when you have revenue recognition. There's now 5 steps. If you have those 5 steps, all right, that's how you recognize revenue now, revenue recognition. And then, all right, one thing they did on the statement of cash flow is they now require you show a section for cash reserves, some type of caches that are reserves for certain things. Like, for example, a bond is coming up to be paid, all right, and you're going to need a certain amount of cash that has to be set aside for those payment of those bonds. So there's a separate comment on the statement of cash flow. You can either show it as cash reserved, or you can show that, if you don't want to show it on a statement of cash flow, you can show it as a disclosure or a footnote. And then they gave the definition of business when we're dealing with business combinations so that you can determine, is it an acquisition when it's a business combination? Or, all right, if it's not a definition of a business, then it's an asset acquisition, all right? Once again, I'm just trying to throw these things at you. All right. Also, what changed was investments. Investments in stocks, investments in equity securities. We own less than 20%. Now, remember, it used to be trading available for sale. Well, that is not used anymore. They're either called, all right, they have a readily determinable market value, or they do not have a readily determinable fair market value. So that's the change. We change from trading to available for sale to ones that are readily available, where we have a readily available market value, or they do not have a readily available market value. Make sure you know how that's handled on the different statements. The other thing is, just right here, all right, on pension and post-retirement plans. Now, when you calculate your pension cost or post-retirement, either one, all right, the actual cost itself for the journal entry, all right, includes the service cost component. So you include all the elements, including service cost, and then if it's pensions, you debit pension cost, and you credit accrued pension liability. Now, that pension cost, when it's brought over to the income statement, all right, it's shown as pension expense, and only pension expense includes all elements of pension, but the service cost is no longer included in that pension expense on the income statement. What happens with the service cost? Well, if you don't have inventory, the service cost is shown as an other expense. But if you have inventory, you can take the service cost now and you can capitalize it to your inventory. So it'll actually be costed out through cost of goods sold. And then, all right, this is another thing. There's supposedly a simplification of certain things, all right? Now, I'm going to tell you, this is not a simplification, but, all right, they had a modification, and it deals with, all right, how you handle the accounting for compensatory stock options. Stock options, they offer only to certain key employees. You discriminate. That's why it's compensation expense, all right? So, all right, you have to know what the change was dealing with compensatory stock options. All right, there was a change. It is required for the first quarter of 18. All right, now that's the only ones that I can think of off the top of my head. All right, now what about other parts? Well, first of all, when it comes to the regulation part, you know that negotiable instruments and documents of title are no longer on that exam. But when it comes to the tax rules, they're going to test you in 2018 on 2017 tax laws, because we're going to be doing in 2018 2017 tax returns. And always, they don't test on the exams with phase-out amounts. You can't memorize phase-out amounts like for IRAs, if you're in a pension plan or work, if your AGI exceeds certain limits, you may be able to still deduct some of the contribution for the traditional IRA, but you can't deduct a portion of it based on an AGI phase-out. Now, do you have to know those AGI phase-outs? No, you do not. You can't know phase-outs because they change every year. So basically, they test on the exam each year stuff that really does not change, doesn't change from year to year. Now, one thing that did change was this, all right? The 2017, if you have medical expenses as an itemized deduction, all right, it must exceed for all ages excess of 10% of AGI. So we don't have to worry about the 7.5% for some and the 10% for others. The 2017 on your individual return, all medical expenses, which are unreimbursed, all right, are only deductible if they exceed 10% of AGI. And also, a lot of the things which expired was the forgiveness of debt on your personal residence. A portion of that was not income. That is gone. That's over, all right? If they forgive you for debt on your personal residence, that is taxable income, 2017. Now you say to yourself, well, today, as I'm talking to you, yes, they're trying to decide, are they going to vote on this new tax act? Well, the new tax act will not go into effect until 2018. So they're not going to show that on your exam. One, your exams for the coming year are basically all made up already, all right? So they're not going to start testing you on things that they're not aware of, but they're always going to test you on the years that you're doing tax returns. So here we are, first quarter 2018, throughout 2018, mainly the first 3 quarters, they'll be testing you on 2017 tax returns, individuals, corporate, okay, all that stuff, because those are the returns that tax preparers do in 2018, 2017 returns. All right, now, as far as BEC goes, I can tell you this, people they've been having trouble with BEC from this standpoint. The BEC blueprints are not as specific as you see the ones in financial accounting and regulation. And a lot of people don't really know, what are they really going to ask on, especially information technology, IT stuff. That's always the question, all right? Well, first of all, we've updated, rewritten parts of the book, all right? And we believe we put in the information that you have to know for IT. But, all right, once again, if you have trouble with it, the chances are a subject most other people have trouble, and they probably will throw that information out as far as the grading process. All right, so don't worry. Auditing, there might be some changes in auditing. I don't teach the auditing, so I can't really speak with that, but I know we put the gentleman who teaches that, the changes are reflected in our books, okay? But off the top of my head, I don't know the auditing changes, all right? I don't know if there's a lot or little, but if you really want to hear that, I can try to find out for you, and then sometime early next week, I can do a Facebook Live, all right, after I find out what those auditing changes are. So anyway, within a short period of time, I hope that helped you knowing what you have to be aware of for the first quarter of 2018, okay? Hey, once again, best of luck on the exam. I hope when your results come, they are positive, and enjoy the moment, but don't enjoy it too long because you have other parts. And remember, the period to keep that part you passed starts expiring, all right? Don't lose it because of the expiration period. Hey, take care, everyone. Enjoy doing this for you, and I hope you enjoyed it, getting something out of it for you. Take care, everyone. Happy holidays. Thank you.